Let's now switch focus to some of the companies. There has been a change of guard at JSW Energy. Prashant Jain has taken over as the joint MD and CEO from Sanjay Sagar last month, and he joins us now for his first television interview. Prashant, good morning, and thank you very much for joining us. Well, let me start with the quote that we got from Sajjan Jindal. He said at the AGM that there will be more consolidation in the sector. Now, of course, JSW Steel is expected to be extremely active, but is JSW Energy also looking for, inorganic moves?
Yeah, pretty much. If you look at Lata, right now, close to 28 to 30,000 megawatt of the capacity which is stranded and sitting idle at this point of time. And these are high-cost power plants which are right now sitting with the huge debt. They have been installed with the 8 to 10 crore per megawatt installed capacity. But right now, the way the power sector is moving, demand and supply situation is skewed. So, but there will be a consolidation which will be taking place in due course of time. But in order to do that, there will be a lot of haircut which needs to be taken by the banks. Earlier the rate was close to 4 crore rupees per megawatt, but right now we think that it will be much lower than that. We are keenly watching what is going to happen in these 12 cases which have gone to NCLT.
Okay, so would you all, considering the nature of your company, which was, steel and power, will the obvious interest be in Monnet Ispat and power? Bhushan Steel and power, would that be the way you would shortlist?
So steel is a separate vertical and JSW Energy is a separate vertical. Both look at the opportunities on arm's length on their merit basis. So if you ask about the Monnet Power, we were working with the bankers at some point of time, and we continue to remain interested in all the assets which are available on the block.
Okay. So interested in all the assets on the block. In the AGM, you've also got an approval to raise 21,000 crore rupees via debt as well as equity. If you could tell us, how much of a war chest are you keeping ready for an acquisition, if any, the current debt on the books and the debt to equity you will be comfortable with if you do want to make that acquisition?
So you need to look at in the context that is precisely an enabling resolution. At this point of time, our debt to equity is 1.29. We are a free cash flow company, one of the strongest balance sheet among all private sector private producers, and at some point of time we will be raising the equity, or we will be increasing the debt when we find a good opportunity. So we are keeping these resolutions as an enabling resolution so that we are fully geared up. At some point of time the opportunity comes, we will be moving very quickly.
Okay. Prashant, good morning. So what are the other assets that you're interested in? What kind of assets?
Precisely you need to look at that. Right now the assets which are on block, Anuj, they are in thermal space. And if you look at the demand and supply situation which has changed recently, in last 5-year plan there was a 92 gigawatt of the thermal capacity was added up as compared to the planning of 71 gigawatt. And because of which there is a oversupply situation. Now these are the thermal power plants which are available, which will be primarily the pit head based. So either we are looking at the power plants which are having some PPAs, or the plants which are not having any PPAs, but they are having at they are close to the coal mines and pit head base, so that the power generation cost is much cheaper. So I cannot name at this point of time which are the assets, but we continue to remain interested.
But you get a sense that these assets right now at current prices will make a good fit.
Yes, precisely in case if banks are taking substantial haircut.
Yeah, I was going to ask you more about that question, but before that, Prashant, renewable energy is posing a huge competition The recent SoftBank-led consortium giving you a 2 rupees 40 paise kind of power tariff has led to UP actually cancelling current PPAs. Are you yourself in danger of losing any PPAs?
So basically these are the PPAs which was cancelled, which were never executed, or the PPAs where the power plants were not operational and they were not as per schedule. So
yes,
most of the PPAs which UP cancelled, those power projects were not even started.
I agree. But my question is, it's only a question of the contagion spreading. I mean, look at the way farm loan waivers spread. There will be a mild pressure, even a very overt pressure, possible pressure from the DISCOMs for existing PPAs to lower their prices. Would you fear that?
So you need to see in the context, Lata. Right now, the power which is available from the solar system is 2 rupees 44 paisa, which is only for 5 hours in a day. And both the generation from the thermal as well as solar will be coexisting in time to come until and unless the storage technology becomes viable and viable at the prices which is making economic sense. That is not going to happen in next 6 to 8 years time frame. So both of them are going to coexist. Now let us look at Government of India is planning another 120 gigawatt of the power from the renewable sources, out of which close to 80 gigawatt power will be coming from the solar system. Now that 80 gigawatt precisely will be giving at 20% capacity utilization close to 20 gigawatt of the energy demand. Now in CEA estimate as well as the estimates of Niti Aayog, the power demand will be growing close to 5 to 5.5%. If that is the situation, then the current PLF in the thermal power plants, which is on an average is close to 60%, is going to go up in next 5-year time frame. So I am not feeling threatened for the reasonably priced PPAs, which are close to 3 rupees 70 paisa to 4 rupees on thermal power. But the power PPAs which are north of 4 rupees certainly will be threatened. I fully agree with the Minister of Power that the new normal will be south of 3 rupees for the power prices. So and solar is going to be a big disruption in this country.
Just one final question, Prashant. For Vijayanagar plant, you've not been able to sign a PPA, and that is operating at very low PLFs. If you could give us your outlook on that.
So in Karnataka, for 3 months during the monsoon, the demand collapses as well as the wind power generation goes up. At that point of time, they are having a oversupply situation. But rest of the 9 months, on a normal course of basis, there is a shortage. So we continue to remain cautiously optimistic for those 9 months to supply power on the medium-term basis in Karnataka.
When will you likely raise equity capital? Will it be this year?
No, we don't need any equity at this point of time. If you look at, we are a free cash flow company. Our debt to equity is 1.29 on March 31st, 2017. So we do not need any equity unless and until we find very compelling opportunity. So we are keenly watching the space, and then as and when some opportunity comes, we will be looking at it. But one thing I would like to mention is that there are the various disruptive technologies which are coming up. So we will be certainly looking at going in future for disruptive technology in energy space, and at the same time our new approach will be on an asset-light model.
Okay, Prashant, thanks a lot for your time today, and good luck for your future endeavors. Thanks a lot. That's JSW Energy in the market for some thermal assets. But India's first and only listed e-commerce company, Infibeam, is on our radar. The stock has gained 160% since its issue in April 2016. There's some talk that they could be considering a merger with Snapdeal. Vishal Mehta, MD of Infibeam, now joins us. Vishal, good morning. First things first, I must confess that I don't really understand your business, and I don't know why your stock should be trading